Hey, I'd like to welcome you to another episode of the Mission Matters Money Podcast, your source for all things money. My name is Adam Torres. You can follow me on Instagram at AskAdamTorres. Keep up with my book releases, book tour schedule, signings, all that other good stuff. Always love to connect with you there. And as always, if you'd like to apply to become a co-author of one of my upcoming books, just head on over to the website, missionmatters.com, and click on Become an Author to apply. All right, so today I have Neal Doshi on the line, and he is a managing partner over at M Cubed Capital Partners. Neal, welcome to the show.
Thanks, Adam. Thanks for having me.
All right, so excited to get into today's topic. So we're going to get into some trends that you're noticing in private equity and deal flow. I'm excited to get into that with you. But before we do, I'd like to go a little bit further into what you're doing over at M Cubed Capital Partners. Tell us a little bit more about the firm, please.
Definitely. So, M Cubed Capital Partners, we are a lower middle market focused private equity shop. So when I describe lower middle market, we are on the micro end of that lower middle market. So I would say, we look at companies that have a $2 million of EBITDA or free cash flow and above. We don't focus on companies that are restructuring or bankrupt or even in the venture space. We look at profitable companies. And what we look to do is we like to partner with the existing teams and the management teams and look to grow it from where they've had it. Maybe they might be stuck. Maybe they may be comfortable in where that. We look to take them to the next level. Between my background and my team's background, we have, over 35 plus years of experience in both private equity and running businesses, and we think that makes a formidable team.
So you gave us size. Are you industry agnostic, or tell us a little bit more about the industries and or sectors that you like to that you find interesting?
Yeah, great question. So we are fairly industry agnostic. We do have a tendency to avoid oil and gas. We don't focus on real estate, and we avoid the pure commodities play. That said, the vast majority of opportunities that we spend time are on services, business services, so light capital-intensive businesses. So think of businesses like healthcare, technology, your general facilities business, maybe, an HVAC maintenance business, even commercial landscaping, things of that nature. But for the most part, we look at opportunities really from a cash flow perspective as well as where the industry tailwinds are dictating it.
And I think that's also a pretty good transition to today's topic. So just trends that you're noticing in deal flow and private equity. I mean, you have a unique vantage point working with the types of companies that you do. What interests you right now? What excites you?
Yeah, I think what's exciting us is that we're in a time right now where, we're seeing an influx of retirement due to the baby boomers. We're seeing an amazing array of opportunities from all spectrums from all across the country. And, there's in this market, today we're not at a pure buyer's market, I would say, nor a pure seller's market. I think we're at a pretty close equilibrium. And I think that's great because now you have both sides working together to find really a common deal. When you have a pure buyer's market, and in our strategy, a pure buyer's market's great from a valuation perspective. But from a long-term alignment, it may not be the best solution as, if you're partnering with a management team, they may feel short-sighted on the deal in terms of wanting maybe more capital at close thinking their business was worth more. And then the converse is true if it's a pure seller's market because you may end up overpaying a little bit. And then as the private equity firm, you're worried about making sure that you haven't depleted too much cash on the front end to get a deal done. So we're at a really good influx or a really good inflection point of where we're at, and we're seeing a lot of amazing opportunities. And I think with the retirement of the baby boomers coming on, and I think we'll see, with a lot of great young entrepreneurs and young executives out there that are looking for help in businesses, I think we find ourselves as a great partner for them.
Any type of industries that you're excited about right now that are just kind of like you're seeing certain deals come by, or you're seeing certain potential deals come by, and you're like, man, we need to start thinking more about going into that space.
When we lose a deal, I think about that space quite well. But, I think, everyone loves technology, and I think, we're seeing more and more technology being used today. But at the same time, identifying good technology versus off-the-shelf technology is very difficult. I look at it, and I like to use my background. I spent the first third of my career really in some sort of healthcare capacity, either working in a lab or a hospital or as a consultant. So I have an affinity for healthcare, and I think that there's a lot of amazing healthcare opportunities out there. I think we look at specialty service opportunities in healthcare, and we think the next 5 to 10 years is really going to be strong for a lot of those services.
Yeah, it's just exciting. I mean, obviously healthcare is not going anywhere, and just the advancements. And what I like is I like all these smart people out there working on services that I'm probably going to one day use, or we're all going to one day use as the age, right? So I'm like,
Sure.
keep going, keep doing what you do, keep on getting better, please. I'm a little bit young still, but I won't be forever, and I'm going to need all this stuff. So keep putting all your might and brain power towards it. That's what I say.
No, you're right. Spot on. I agree. I think, you'll see I think it's just something that's not going anywhere, to your point.
Can you talk a little bit more about the kind of nuance of what it means to partner with? Because I don't want to assume some of the people listening, they've heard this, they haven't, and the idea of what it means when a firm goes in and partners with the existing founders to kind of add to what they're doing versus just taking control. Can you talk a little bit more about that?
Definitely. So I think, maybe the best way to do is maybe provide an example. So we may look at a business that's, that's done well. Ownership is, the founder, he's, let's call it, in his late 50s, early 60s. So he's been in the business for quite some time. He understands the ins and outs, and he's lived a comfortable life. Maybe he's taken home $2 to $3 million a year. So he's living well, but he's still got some fire burning. He still wants to, leave a legacy to go from, let's call it, maybe he's doing 10 million of revenue. He wants to get to himself to 30 to 50 to 100 million, but he doesn't understand, or he doesn't know how to do it. And then also he might be a little nervous doing it himself, right? When you see founder-owned businesses, a lot of them, a man or woman started in their garage or their apartment or, on the dinner table or something, and they grew it. So they've always looked at themselves as a bootstrapped business. What we look to do is say, look, let's take your strengths and let's mix them with our strengths, and let's come together and let's figure out what that is that gets you from this $10 million company to 30 to 40 to 50 to 100 million. And let's work together to do it. We'll never understand your business as well as you do. You've been in this business, your whole career, your whole life. It's almost like another child to you in a lot of ways. And our goal is not to pretend that we know it better, but it's to use our strengths to say, look, you want to get yourself from 10 to 20? What does that take? Does it take, building out a sales team? Does it take developing some financial metrics in place, maybe adding a CFO of some sort? Does it take, looking at acquisitions, whether it's within your competitors, buying one of them, or something within your value chain that makes sense to increase your breadth of services? And we work together, and it's not we demand that you do this or you need to do this. It's what makes the most sense for this business in the long run. So your legacy is getting yourself from that 10 to 20 to 50 million to that final, landmark before we look to exit again.
That's awesome. So, Neal, if somebody's listening to this and they want more information on M Cubed Capital Partners, what's the best way for them to reach out and to connect and get more info?
Yeah, I would say just go to our website. It is www.mcubedcp.com. From there, you can always contact me via phone or email. I'm also on LinkedIn, so feel free to reach out on that. And, we're very accessible. We like talking to founders. We like talking to management teams and working together to figure out what the best solution is.
That's awesome. Well, Neal, really appreciate you coming on the show today and tell us more about all the great work you're doing over at M Cubed Capital Partners and also trends in private equity. So thanks for that. And to the audience, as always, thank you for tuning in. Hope you got a lot of value out of this. If you did, don't forget to subscribe to the podcast, leave me a review on the Apple iTunes Store. And if you're watching this in our YouTube channel, Mission Matters Money, definitely give us a subscribe there, but also leave some comments in the video. Love to know what kind of projects and products that you're working on. And Neal, thanks again for coming on the show.
Thanks, Adam. This was a lot of fun. Appreciate the time.